Okay, let's unpack this. Imagine the scene. A brand new company, just gone public, supposed to be all about K-pop media. Then bang, almost out of nowhere, it announces this huge pivot, right? Jumping headfirst into Bitcoin.
Yeah, and the stock price. It just explodes over 130% in a single day. You just have to ask, what on earth is going on?
Exactly. It's one of those stories that, well, makes you stop and really dig deeper. So this deep dive, it's all about that company, K Wave Media Ltd, or KWM.
Right. And you, our listener, handed us this pretty detailed analysis report on KWM. It's got financials, strategy, market buzz, all recent stuff up to June 4th, 2025.
So our mission here is clear. We take these sources, try to cut through all the noise, and figure out what KWM really is, especially after this, well, incredibly dramatic shift in strategy.
And the sources, they flag the central issue right away. You've got a company with basically zero revenue reported, not much of an operating history. And suddenly, it's making this enormous, highly speculative bet on Bitcoin. And that bet has almost instantly become, well, the only thing driving its valuation. It's quite the high wire act.
It definitely sets the stage for a fascinating conversation. Now, before we really jump into the weeds here, just a quick note. For ongoing analysis, updates on situations just like KWM as they develop, you might find it helpful to like and subscribe to the stockanalytics.ai YouTube channel.
Good point.
And for members, it's just Euro $4.99 a month. You can even give us a ticker symbol. You'll get a prioritized deep dive analysis like this one, or maybe a deep dive right after earnings calls.
Yeah, it's a solid way to stay plugged into these fast-moving, often complex scenarios.
Absolutely. So, okay, let's start at the beginning. Where did KWM actually come from? What was the original pitch?
Well, the analysis explains its origins. It came about through a SPAC merger, a special purpose acquisition company.
SPAC.
Yeah, between Global Star Acquisition, Inc., that was the SPAC, and a company called K Enter Holdings, Inc. That deal officially closed on May 13, 2025.
Okay, so a SPAC deal. That itself tells us something about the structure. And it's incorporated in the Cayman Islands, listed on Nasdaq from May 14th.
That's right. And they came out swinging, marketing themselves pretty boldly as the first Korean media alliance listed on Nasdaq.
Sounds impressive on the surface, but what was the actual business plan? What were they supposed to do?
The stated core business was really rooted in K-pop entertainment. The idea was creating content, IP, things like TV shows, movies, music, also merchandising, and making strategic investments.
Investments in what specifically?
Specifically, the source mentions plans to acquire controlling stakes in about 6 different Korean entertainment companies. K-Enter, the original company, actually had an internal drama team and even acquisition contracts ready to go before the merger happened.
So the vision was this kind of K-culture powerhouse, leveraging the whole K-pop phenomenon globally. Pretty ambitious.
Very ambitious, yeah. And the report suggests it was mostly aspirational when they listed, based on the lack of actual operations or revenue yet. But then came the big twist, the one that got all the headlines.
The June 4th pivot. This is really the heart of the story, isn't it?
Oh, absolutely. The huge news was this announcement of a $500 million equity purchase facility. And they were very clear what this money was for, funding a Bitcoin-centric digital asset treasury strategy.
$500 million. Wow.
Yeah, and they explicitly said their goal was becoming the metaplanet of Korea, basically trying to copy the playbook of Metaplanet Inc., that Japanese company known for stacking Bitcoin on its balance sheet.
So hang on. They went from talking about buying K-pop companies to setting up a mechanism to sell up to $500 million in stock to buy Bitcoin. That's more than a pivot. It's a complete U-turn.
It really is. Yeah. And the sources point out, this means the company now has this kind of dual focus. You've got the original media plan, which is still mostly on paper, and then this new, seemingly dominant Bitcoin strategy. The report's quite clear. This changes the whole investment case.
And this is exactly why it matters so much to you listening in.
Precisely. Because according to this analysis, this fundamental shift means KWM's future success is now, and I quote, overwhelmingly tethered to 2 things. 1, the price of Bitcoin. 2, their ability to actually pull off this incredibly complex crypto treasury strategy.
So it's not really a K-pop bet anymore.
Not primarily, no. It's fundamentally different now.
Okay, that identity shift is absolutely crucial. So who's steering the ship through this? Let's look at the management team the sources highlight.
Right, the leadership. Looking at their backgrounds, as the report details, it leans very, very heavily towards finance and investment, which, makes sense given the SAMAC roots and definitely makes sense with the Bitcoin pivot.
Who are the key players mentioned?
Okay, you've got Byung-Ho Choi, he's the chairman of the board. The report says he publicly endorsed the Bitcoin strategy, called it visionary. Then there's Ted Kim, one of the co-interim CEOs. Strong finance background, PE, cross-border M&A, got his law degree from Penn State. He sees Bitcoin as a foundation for innovation.
And the other co-CEO?
That's Chin-Hui Tan. He's also executive chairman and interim co-CEO. Extensive global finance background, places like Trafigura, Apollo, Keppel, DBS. He's got an MBA from Yale, CFA, CPA. Serious finance credentials.
Undoubtedly deep finance experience there, but does the analysis question if this team has the right kind of expertise for, well, both sides of the business now, the media side and this big Bitcoin operation?
It absolutely does raise that question. Their finance chops are clear, great for deals and capital management. But the report flags a potential gap in direct operational experience. You know, the nitty-gritty of the K-pop industry, or maybe even more critical now, the practical side of running a huge crypto, treasury security, yield, Web3 development.
That's a really important point.
And the sources also emphasize that both CEO roles are currently interim. That adds another layer of uncertainty.
Right. So great finance minds, maybe, but perhaps not the proven hands-on operators for these very specific, very different businesses they're suddenly in. How does the report frame management's view versus the risks?
Well, management paints it as bold, forward thinking, aligning with DeFi, attracting global investors, that whole Meta Planet of Korea thing. But the sources immediately push back with the risks. Huge execution risk in this new crypto space. Massive dependency on Bitcoin's volatility.
Which is legendary.
Exactly. Then there's the risk the original media plan just gets ignored, plus significant regulatory clouds hanging over crypto. The report basically asks, is this visionary leadership or just a massive gamble?
And this gamble, it's being bankrolled by that $500 million equity facility.
That facility is absolutely central. It gives them the power to sell up to $500 million worth of KWM shares over time. They plan to sell these shares to an entity named Bitcoin Strategic Reserve KWM LLC. The analysis is unambiguous. This will cause significant shareholder dilution as new shares get issued and sold off. But what's really flagged as a major concern in the source material is the almost total lack of transparency. We don't know the specific terms of this deal, and crucially, we don't know who this counterparty, this Bitcoin Strategic Reserve KWM LLC, actually is.
Not knowing who's on the other side of a $500 million funding line, that sounds like a pretty big red flag.
It definitely raises eyebrows.
What about management's alignment with other shareholders, especially given they pushed through this radical change?
This is one of the most striking points in the report. Insider ownership is incredibly high. We're talking 97.56%.
Wow, 97.56%.
Yeah, so on one hand, sure, massive skin in the game. Their fortunes are tied to the company. But, and this is key with such a tiny public float, the shares actually available for trading are minuscule. This means insiders have, and I quote, near total control. They can make these huge pivots, and minority shareholders. The report says they have very little influence.
That level of insider control is a huge factor when you're thinking about risk. Okay, let's brace ourselves and dive into the financials. What do the sources say?
The financial health section, looking at data from early June 2025, it paints a really stark picture. Reported trailing 12 months revenue, TTM revenue, a flat $0.0 million. Zero. They reported a net loss of around $0.77 million TTM, negative EPS of negative $0.18. And the loss actually got bigger in the most recent quarter.
Zero revenue, losing money, not exactly a strong foundation for...
Well, for anything, really.
It's tough. Profitability margins, either not applicable or negative. The reported book value per share is also negative, negative $1.16. That means negative equity. Liabilities exceed reported assets, and that's before factoring in this new funding.
And cash.
Minimal. Before this new facility was announced, cash per share was reported at just $0.01.
Negative equity, almost no cash. This really isn't the profile you expect for a company making potentially $500 million strategic bets. What about the rest of the balance sheet? The sources point to really weak liquidity. Current ratio, quick ratio, both reported at 0.09, very low. Suggests they have very few liquid assets compared to short-term debts. They also mention negative working capital.
So short-term debts outweigh short-term assets.
Exactly. There was also that confusing note about assets you mentioned.
Yeah, the report mentioned a potential $8.5 billion asset figure.
Yes, one source showed that, but the analysis strongly warns against taking it at face value. It seems completely out of line with everything else, not corroborated. The advice is treat it with extreme caution until, proper audited financials can maybe explain it. It just doesn't fit the picture.
Okay, so we disregard that massive number for now. Given the zero revenue, the losses, the negative book value, how does the market even value this thing? After the surge, it's around $285 million market cap.
Well, the report explains why traditional value metrics like PE, PS, PB are basically uninformative or inapplicable. You just can't calculate them meaningfully when the inputs are zero or negative.
So the valuation is based purely on...
It's described as almost entirely speculative, driven by sort of three things. First, the perceived potential of the Bitcoin strategy, seeing KWM as a leveraged bet on Bitcoin itself. Second, the very uncertain future potential value of those K-pop acquisitions they still might make. And third, overwhelmingly, it's just market sentiment, momentum, news flow, especially anything positive about Bitcoin.
So if you look at this through a classic value investing lens, Buffett style, understandable business, predictable earnings, good management, margin of safety, where does KWM fit?
The sources are pretty direct. They state KWM falls far outside the typical investment criteria for value investing. The business model isn't understandable anymore. It's this complex, unproven hybrid. Prospects are speculative, not predictable. Management's expertise in the new main strategy is, well, unproven at the top, and margin of safety. There is none when valuation is pure sentiment and equity is negative.
And why is really grasping this financial snapshot so crucial for you, the listener?
Because it makes it crystal clear that the huge stock surge wasn't tied to any improvement in the actual business. No better operations, no profits appearing. It was purely the market reacting to an announcement, a speculative bet on Bitcoin's future, and the company's ability to execute a totally different strategy. You're not investing in fundamentals here. You're speculating on narrative and asset prices.
Okay, so summing up the first half. A company starting from zero, negative financials, makes this massive bet on Bitcoin, funded by potentially huge dilution, and the stock goes absolutely nuts.
It pretty much captures it. It's quite a setup.
Right. And here's where it gets really interesting. How exactly did the market react? Who actually owns this stock? And what does that mean for these wild price swings? And maybe most importantly, what are the fundamental risks you absolutely need to know about? We'll unpack all of that, and we'll reveal our final provocative thought right after this. Welcome back to the deep dive. We've covered KWM's surprising journey from a no-revenue K-pop hopeful to a major Bitcoin speculator, all against a backdrop of weak financials and finance-focused leadership. Now, let's dig into the market's reaction and the significant risks highlighted in the sources, starting with Chapter 4, Market Sentiment.
Okay, the one word that defines KWM stock is volatility. Extreme volatility. The report cites a trading view metric around 123.64%. And the Beta figures. They're kind of all over the place, sometimes negative, suggesting it moves opposite the market. But honestly, given the unique situation, it's probably just reflecting how news-driven it is.
Yeah.
Maybe a slight perception of Bitcoin being uncorrelated sometimes.
And that massive surge on June 4th is Exhibit A for that volatility.
Absolutely. The stock was actually trending down hard before that. Hit an all-time low of $1.52 on May 27th. Then boom, June 4th, after the Bitcoin news, it spikes over 130% from the previous close, around $1.92. Hit highs of $6.47 intraday. Just bounced around like crazy, trading between $3.68 and $6.47 that day.
And the volume must have just exploded, too.
Went absolutely parabolic. Think about it. Historical volumes were sometimes down around, say, 44,000 shares. On June 2nd, for example. On June 4th, it traded roughly 90 million shares.
It's 90 million. Wow.
That kind of explosion, especially compared to normal days, it just screams intense speculative interest, momentum chasing, all driven by that announcement.
Who's really driving the sentiment? Are we seeing Wall Street analysts weighing in?
The sources say nope. Pretty much a distinct lack of traditional analyst coverage. The sentiment is described as overwhelmingly driven by the news of the Bitcoin strategy, amplified by buzz on crypto news sites, social media. It's a narrative trade, pure and simple, not based on deep institutional analysis.
And this kind of dynamic, combined with that ownership structure we touched on, seems like a perfect storm for more swings.
It is. The report explicitly calls the mix of news-driven sentiment and that minuscule public float a recipe for continued extreme stock price volatility.
Just remind us, the public float, that's the tiny fraction of shares actually traded freely, right? Not the insider shares.
Exactly. Total shares are over 63 million, but the public float, it's estimated at only about 0.07 million shares. Tiny. That means even relatively small buy or sell orders can move the price dramatically. on that June 4th, with 90 million shares traded. The entire float must have turned over hundreds and hundreds of times. Just shows the sheer speculative frenzy.
And the report also mentioned high short interest, people betting against it.
Yeah, significant short interest. A reported short float of 29.81%, meaning nearly 30% of the tiny float was sold short. That signals a lot of bearish bets. But the short ratio was low, 0.19, meaning it wouldn't take long for shorts to cover if they had to. High short interest, low float, sudden good news. That can ignite a short squeeze.
Where shorts are forced to buy back, pushing the price up even faster.
Exactly. The June 4th rally probably had some element of that mixed in with the genuine excitement about the Bitcoin news.
So why does this whole market sentiment picture matter so much to you, the listener?
Because it hammers home that the stock price is completely detached from any underlying business reality. Because, well, there isn't one yet. The value you see on the screen is purely a function of news, hype, speculation, and the weird mechanics of an ultra-low float stock. It's a playground for volatility traders, maybe, but incredibly risky for anyone looking for a stable, fundamental investment. Which leads us nicely into Chapter 5, ownership structure. This really underpins a lot of that market behavior.
You flagged it earlier, but that insider ownership number is worth repeating, isn't it?
It really is the defining feature. Exceptionally high insider ownership, 97.56%. Like the report stressed, this translates to near total control for insiders. So if you're a minority shareholder buying on the open market, you have very little influence on big decisions like, say, completely changing the company's strategy overnight.
What about institutions? The sources seemed a bit fuzzy there.
Yeah, the data was conflicting. Some said 0%, another figure was 13.54%. The analysis suggests that traditional institutional ownership is likely very, very low. Maybe some legacy SPAC holders or specialist funds that like these super speculative plays. The conflicting data just adds another layer of murkiness. But the main story is overwhelming insider control.
So just to summarize the share structure clearly.
Okay. Total ordinary shares out, about 63.25 million.
Yeah.
Public float, the shares easily tradable. Incredibly small, around 0.07 million shares. That's like 0.11% of the total shares.
And a direct consequence of that structure is,
like we've been saying, this high insider ownership plus tiny float equals an extremely thin market. Price discovery gets weird and erratic. The stock is massively sensitive to even small amounts of trading or news. It just amplifies volatility and risk for any minority shareholders who are essentially just passengers on a ride controlled by the insiders.
this structure definitely seems to pour gasoline on all the potential risks. Let's get into those risks now. Chapter 6, using the categories from the source analysis.
Right, the sources lay out a pretty hefty stack of risks. First up, execution risks.
What are the big hurdles here?
Well, actually doing this $500 million Bitcoin treasury strategy is a huge challenge. The report highlights needing deep expertise in, acquiring Bitcoin safely, storing it securely, maybe managing yield generation, running network infrastructure, integrating Web3 stuff. It's not obvious that this specific large-scale crypto operational know-how exists right at the top.
And the original K-pop plan, that's not exactly a walk in the park either.
Oh, definitely not. Huge execution risks there too. Trying to successfully integrate maybe 6 or 7 different Korean entertainment companies, each with its own culture, operations. Plus, the K-pop business itself is notoriously hit-driven and unpredictable. Building that from scratch is tough enough, let alone while you're also trying to launch a giant Bitcoin treasury on the side. Next category, operational risks. The sources mention KWM being tagged by some as a shell company, just reflecting its limited operational history. That label itself can attract more scrutiny.
What about that confusing SEC filing note, the registration revoked thing? Was that a real problem?
The report looked into that. It seems that specific note, which popped up on one SEC page, was likely an error or maybe related to an older entity involved in the SPAC process. The current company, KWM, has filed its necessary forms, like the 20F, and is a reporting foreign private issuer. So based on the analysis, that revoked note probably doesn't reflect their current status. Seems like a bit of a technical ghost.
Okay, good to clear that up. Other operational risks.
Yeah, relying on fickle K-pop trends, the risk of losing key people if they do make acquisitions, and just the basic challenge of building any revenue when your focus and resources might be pulled towards the big Bitcoin play. Then we have the financial risks. We've seen the grim numbers. Ongoing losses, cash burn are pretty much baked in for now. The weak balance sheet, negative equity, poor liquidity, that's a major worry before you even fully factor in the terms and impact of the new funding.
And that $500 million facility itself is a huge financial risk, right?
Absolutely. Massive shareholder dilution is guaranteed. The analysis stresses that we don't know the exact price or terms they'll get when selling shares to that Bitcoin Strategic Reserve KWM LLC, but dilution will happen, and it will reduce the ownership percentage for everyone holding public shares.
And the most glaring financial risk now is just
Bitcoin itself. Direct, significant exposure to the price fluctuations of Bitcoin. It's famously volatile. If Bitcoin takes a sustained dive, it hits the core of their strategy, hammers their main asset's value, and just fundamentally undermines the whole plan. KWM has basically become a highly leveraged bet on Bitcoin going up. And finally, there are market, regulatory, and external risks. This includes general crypto market swings and the big question mark over regulations, the evolving, often uncertain global regulatory landscape. Rules changing in the US, South Korea, Cayman Islands. Any of those could throw a major wrench in the works.
what about those potential U.S. tariffs on Korean goods? Does that matter much now?
The report touches on it. The Bitcoin side isn't really affected, obviously. But if KWM ever gets that K-pop merchandising business off the ground and exports physical goods to the U.S., then tariffs could bite, especially if they increase around that July 8th, 2025 date mentioned. But honestly, compared to the Bitcoin exposure, it feels like a secondary risk for the company's overall fate right now.
And broader economic factors.
Yeah, things like an economic slowdown, inflation, interest rates, they can hit consumer spending on media and affect crypto markets. So KWM is exposed there too. The analysis also flags two other critical external risks. One is that opaque counterparty risk with Bitcoin Strategic Reserve, KWM LLC. Who are they? Are they financially sound? What are the exact terms? It's a big unknown, a potential single point of failure for the funding. The other is potential SEC scrutiny, given the SPAC background, the wild pivot, the crazy volatility. Clear disclosures are absolutely crucial.
It sounds like these risks are all tangled up together.
They really are. The report emphasizes how they compound each other. Like if the media acquisitions fail, they become even more reliant on the Bitcoin strategy, which has its own huge set of risks. It's just this complex web of significant interconnected dangers that really defines KWM as a highly speculative venture.
So why is understanding this whole stack of risks so vital for you, the listener?
Because it makes it clear this isn't like investing in a normal company with typical business risks. This is a high-stakes gamble built on speculation, with numerous ways things could go wrong far beyond just the price of Bitcoin. You absolutely have to be aware of these if you're even thinking about touching the stock. Which brings us to the conclusion. Chapter 7. Time to tie it all together.
Okay, so summing up, KWM started as this K-pop dream with zero revenue. It then morphed incredibly quickly into a company betting the farm, essentially, on Bitcoin, funded by potentially massive share dilution. Its financials are weak, its stock is off the charts volatile because the float is tiny and it runs purely on news and hype. And it's facing this whole mountain of interconnected risks, execution, financial, market, regulatory.
And revisiting that value investing framework the sources used. KWM, based on this analysis, just falls far outside the typical investment criteria. The business model isn't clear or proven anymore. It's this weird, complex hybrid. Future prospects, highly speculative. Leadership's expertise in the main strategy, questionable at the operational level. Margin of safety, non-existent. Valuation is pure sentiment. Equity is negative.
So how does the analysis ultimately characterize KWM?
It concludes KWM is best viewed as a speculative vehicle. It's essentially framed as a leveraged investment vehicle for Bitcoin, with the K-pop stuff tacked on as a potential but highly uncertain bonus. The profile is explicitly described as suited for traders chasing momentum or volatility, definitely not for traditional long-term fundamental investors.
The future really feels like it could go one of two very different ways.
It does seem very binary. The analysis mentions potential catalysts. Bitcoin soaring. Maybe they actually pull off the media deals, make progress on Web3, get permanent leadership, somehow start generating positive financials. But the downside factors are equally stark. Bitcoin crashing, total execution failure in crypto or media, M&A deals falling through, burning through cash, killer regulations, crippling dilution, the counterparty vanishing, losing key people. It's high reward, maybe, but incredibly high risk.
And let's circle right back to that initial hook, the stock jumping over 130% on June 4th.
That surge, the analysis makes clear, was purely the market's immediate speculative frenzy reacting to the Bitcoin news. It had nothing to do with any improvement in the actual business because there wasn't one. And that's really the core takeaway from this story, just how powerful sentiment and bold strategic announcements can be in today's market, especially for these low-float stocks. They can drive value based purely on narrative and speculation, completely divorced from traditional fundamentals.
It's a really vivid example of how markets work sometimes, isn't it?
It certainly is.
And remember, you can keep up with deep dives like this and even request your own analysis by subscribing to the stockanalytics.ai YouTube channel. Plus, for members just €4.99 a month, you can drop us a ticker symbol and get a prioritized deep dive like this one or one after earnings.
Yeah, it's a really useful way to get timely, detailed analysis on these kinds of complex situations.
So here's the final provocative thought we want to leave you with. KWM's wild ride from K-pop hopeful to Bitcoin treasury, with all the extreme volatility and speculation. Does this story signal some kind of new paradigm? A world where market hype and audacious bets on assets like Bitcoin can create value entirely separate from old-school business fundamentals? Or is it just a classic speculative bubble inevitably waiting to burst?
Something definitely worth mulling over and watching closely.
Now, just the usual reminder, this deep dive is purely for informational purposes. It is absolutely not financial advice. We're just here to unpack the sources you provided us.
And this analysis was generated by an AI system based on those research snippets. We've aimed for accuracy based on the material given, but AI does have limitations. And this analysis doesn't represent access to all possible information.
Remember, investing always involves substantial risk. You absolutely must do your own thorough research and always consult with a qualified financial advisor before making any investment decisions. What you hear here is not a substitute for that independent research and professional advice.
Thanks for tuning in to this deep dive.
We'll catch you on the next one.